Mr. Manson, thank you for starting it off with a nice handshake. And
Thank you.
I guess welcome to Zurich. How many times have you been here?
A few times.
So yeah, you are. What are you here in Zurich for?
Well, we're at the Denver Gold Group European Gold Forum, meeting with investors and the big pool of very gold-focused wealth managers and investors in Switzerland. I've been here myself a number of times, and it's the Denver Gold Group do a fantastic job, as they do in the fall in Denver as well, and it's very worthwhile coming here. Very interesting group of people you meet, very well represented in terms of Canadian companies, US companies that are here. So yeah, it's very much worthwhile.
Okay. So I wanted to talk a little bit about your experience, because this isn't your first rodeo taking something into production. And by the way, for the audience, you're going to hear a couple beeping things. I can't turn it off, so try not to get distracted.
It's a rental.
Yes. So yeah, your experience. How many different deposits, how many different developmental stories have you taken into production?
So this will be my third.
Okay.
And that's quite a lot actually for a mining career, because a lot of people go through an entire career and never go through the experience of building a mine.
Right.
You can be in exploration for a long time. You can work for a producer, and you can go through. But the actual job of taking a single asset, in my case, it's always been single asset companies with a discovery asset and taking that through the production. It'll be my third time. The first time I did it was as a junior guy working for Bob Gannicott at Aber. We were the minority partners in the diving mine when Rio Tinto was building that. So I had a front seat to that process as the technical guy for the junior partner. And then myself as CEO of Stornoway Diamonds building the Renard mine. I'm happy to say both of those projects are still operating, both making money. And the Valentine project with Marathon will be the third.
So you've got experience with this. When it comes to the deposit right now and where you are, I think I'm going to ask the audience to watch a video that's on your website that highlights the project. There's three deposits there, stretching over 6 kilometers. You've got Leprechaun, Marathon, and Berry is the middle deposit.
Yep.
So we'll put that up on the screen now, and if you can kind of take us through where you're at.
Yeah, Leprechaun and Marathon are the original 2 deposits. Leprechaun was actually first found in the late 80s and then developed by Marathon into a mineable deposit through the 2010s. Marathon got involved in this project in 2010 first. Marathon was a discovery of Marathon, hence the name. And then so was Berry. Berry came along very recently in 2020. Berry actually was discovered during the environmental assessment process for the project. So that's why we talk about a 2-pit mine and a 3-pit mine. The 3-pit mine is what we've described, what you've seen on the screen there, and what we've shown in our most recent updated feasibility study in December 2022. And that sort of discovery history at this project is really how you should think of Valentine. There's a lot of gold endowment there along the shear zone contact, and we've been knocking off these big million-ounce plus deposits every few years. That's been the track record over the last 10 or so.
So what's the company's plans right now for 2023 and moving into, say, the end of the year into 2024?
Well, we're under construction. So we got the 2-pit mine through environmental assessment, federally and provincially. Got released from that last year. Got our permits in place to start construction. Broke ground in October of last year, 2022. So we're 6 months into a build now. So 23 really is following through on that plan. A lot of civils work going on. There's 440 people currently employed with this project in some capacity. So it's a big project. It's the biggest gold mine ever in Atlantic Canada. Certainly the biggest currently in the province of Newfoundland and Labrador. And it's Newfoundland and Labrador has a history on the island of Newfoundland of relatively small scale gold mining, 20, 30, 40,000 ounces a year. This will be upwards of 200. So it's a big project for the province. And so we're building it this year, building it next year. The schedule is to have first ore delivered to the mill end of 24 and then ramping up the first quarter of 25. Exploration goes alongside that. We're still doing our exploration alongside the build, which is a little bit unusual, but very much the core business of the company now is delivering on this big project.
Where are you doing the exploration still?
So we've moved the exploration out, the real kind of grassroots exploration and new drilling is being moved out of the main project area. So we will be doing an RC drill program, 70,000 meters, on those 3 ore bodies over the next 2 years. And that's grade control drilling, and that's going to give us some information about gold content and hopefully some nice surprises as well. But the classic kind of diamond drill bit exploration is moving out, where we've had some success with our more generative prospecting type exploration, an area that we call the Eastern Arm. It's up in the eastern part of the property. It's a big property. And this is a 13-kilometer long area that's completely unexplored. The same geology continues through this area. And then last year, we got a whole bunch of very encouraging geochemical results. There's gold grains and till samples right along the shear zone contact through that area. So that's an obvious thing to go to, right? And so the guys are going to be up there this summer again, putting in roads, trenching, looking for drill targets, drilling upon those results eventually. And that's been the exploration discovery sequence for this project since the start. Prospecting, geochemistry, you find something good, you trench, you see it in bedrock, you drill, and you step out with the drilling. So that whole process has started again anew for us in this Eastern Arm area. So that's very much the focus of the exploration. There's another deposit, because there's a series of these deposits, called Frank. And Frank is something we're just now beginning to talk about. It's a kilometer west of Leprechaun. And it's really interesting because it was discovered in 2011 and kind of overlooked in the early days and thought to be a little bit different in terms of its mineralizing style. Younger, maybe not so interesting. And a fresh pair of eyes on Frank is telling us that it's more the same. It's the same type of deposit as we have with the other more major deposits. Under-drilled, same types of grades, same types of mineralizing style. So that's going to get 5,000 to 7,000 meters of drilling, second half of the year. And that's interesting, it's right beside Leprechaun. So if that actually bears fruit, that's potential mill feed for us, I think, in that location. So yeah, a lot of stuff going on still. And I'll say, Carl, it's a bit unusual to be doing this amount of exploration during a build.
Right.
Usually you down tools and you focus on the build, and we're fitting it in
right.
Because of the value of doing it, I think.
It's too good to ignore.
Yeah, there's a lot of discovery potential with this project.
Well, that's kind of exciting for sure. Maybe not exactly relevant to the future of the story, but since you're past a lot of the or all of the regulatory hurdles, what was that process like in Canada? Because I speak with a lot of companies, and one yesterday that's a Nevada-focused company, and they're just not a fan of Canada. But you're past that cycle now, right? So what was it like dealing with the government?
Well, because I've had some experience with Nevada as well, because I was on the board of Fiore Gold, and we had the Pan mine until it was transacted with Calibre last year. So I've got experience in the permitting regime in both. Look, I think Canada is a great place to build a mining business. I mean, it depends, I think, what jurisdiction you're in. So in Newfoundland and Labrador, certainly, we're in a very resource-oriented jurisdiction.
Yeah.
And permitting a mine is all about social acceptability. And if you have community members who are knowledgeable about resource extraction, see the value of it in their lives and in their communities' lives, it goes a long way. So certainly we've enjoyed that aspect of having a project in central Newfoundland. But at the same time, it's a big achievement to take a greenfield, open pit mine of any commodity, and we're gold, through a full federal and provincial environmental assessment. It's not every year that actually happens in Canada, and for Valentine it was last year. So, look, I'm a big fan of Canada as a place for mining and for a mining business. You are successfully seeing projects being discovered, developed, permitted, financed. Very, very happy with our situation in that regard.
Absolutely. Well, and Newfoundland, I mean, they do struggle for jobs there. So you're bringing a lot of, you're bringing a lot of jobs to the community.
Yeah.
At the end of the day. So what's it been like, trying to hire people and to actually staff this thing to build it out?
Well, that's actually probably the biggest challenge that everybody in the mining business has right now. It's a very tight labor market. There was a tight labor market going into COVID, and COVID kind of made it worse. So that means for most people, it's hard to find people, and there's a lot of compensation cost inflation when you do find the people you want to work with. So our situation is better than most in Newfoundland, because of course Newfoundland has a lot of skilled mining people who travel out of Newfoundland to other projects elsewhere in Canada. And anybody who's flown around, Canada, if you get the flight into Gander, it's full of people who are rotating from projects in Ontario and the NWT in Yukon and Alaska and places like that. So we have the people. We're competing against all those other projects to build that team. Canada is our labor market. So we're taking the view that we will be, competitive with compensation to get, the people that we want to get, and within the terms of our labor market plan, or our workforce plan, and we've been successful in that so far. But it certainly is a challenge that everybody is facing in the mining business, and of course, if you've had the experience of building and operating a mine, you realize that HR is the most important function, because if you're short people, if you go to one shift over two, if you lose that second shift in your mining, during production, it goes right to, you're missing tons that quarter, you're missing production that quarter, you're missing revenue that quarter, and you're explaining why that happened in your quarterly earnings call. So you have
to stay ahead of that.
You got to stay ahead of that all the time. Your HR person is the most important person in the team, and if you take your eye off that, you're gonna have problems. So the benefit of being in that situation previously is helping us here for now, right now, for sure. But I think that's probably something that all CEOs in the mining business are facing right now and are talking about.
So it sounds like you have a little bit of a competitive advantage, because a lot of people that are from Newfoundland have to travel out, and now they kind of get to work in sort of their backyard.
Yeah, and we're a camp-based site as well, 2 weeks on, 2 weeks off. But the benefit people have working for us is they can go home the same day at the end of their shift.
Yeah.
It's not a 2-day, flight from the Yukon, held up by weather, half of the time. Right. They can drive out at the end of their shifts, get home. If they have to get home in an emergency, we're on the island. It's a local proposition. So that the life-work balance for us is a lot better than for other employers, and that's certainly something we stress in our recruitment.
Why don't we talk a little bit about the economics? Like when you had all your studies done, what gold price were they using?
Well, yeah, we used $1,700 for our December 2022 updated feasibility. So we've got a slide in our presentation deck that I'll be showing later on today that shows you what this project's valued at $2,000 gold. So we're certainly not overvalued in this gold market, that's for sure. It's a very strong commodity market to be building a new mine. We also pride ourselves, by the way, in because we did a December 22 updated feasibility, we actually brought out that feasibility after we broke ground in the construction. We're showing you very, very fresh costs for this project, probably the freshest of any of our peers in the development business right now. And we're reporting against those costs every quarter when we give project updates. So trying to show you the progress of this project, of this build, with the freshest and most relevant information possible. And then inviting you to think about what this project's worth in 18 to 24 months when it's producing.
Do you have any macro comments on gold moving forward?
I think all of the vectors look positive, right? I mean, if interest rates are coming down, if inflation gets cured, the second half of this year, I mean, we made a macroeconomic thesis that potentially 21 and 22 were bad years to be developing a mine based upon 2020 numbers. and that 23 and 24 would be good years to develop a mine based on 2022 numbers. So I'm talking about, cost estimates, supply chain issues, inflation, labor force tightness, and the start of this year was a continuation of 22 in terms of general macroeconomic environment. I'm not talking about the gold price per se. I'm talking about how supply chains work, how vendors are managing their price books, the availability of people and contractors. So we didn't see a loosening of that world through the beginning of this year, but we're maybe seeing it now. Going into the second quarter of 23, we're beginning to see, the macroeconomic signals around inflation are getting down to the vendor community, and they're beginning to think about, how sharp their pencils have to be when they're bidding on the work of people like us. So I think the thesis that this year and next year are good years to build a mine is holding up at this moment. We're just getting started as a developer, but that's more of a macroeconomic sort of answer from a developer's point of view, right?
Sure.
Thinking about how you actually run a business based upon supply chain and vendors bidding on your business. The macroeconomic thesis for gold, I mean, everybody has a view on that, right? And if you're investing in a gold mining company, you probably have a positive view on that, and certainly we share that view as well.
So how's the company been managing inflation in the last couple of years?
Well, I think there are a number of ways. Speaking as a project developer, there are a number of practical ways where you can try and address that. And I'll point out that we've got, of all the project developers out there, we've probably got the freshest cost numbers out in the market, because we did an updated feasibility in December of last year, December 22. So our original feasibility study was in 21. So we told the market back in September what CapEx was looking like, and it was a higher number, and we took some medicine for that. But I think it was the right thing to do, because that allowed us then to give a fresh view on CapEx for our updated feasibility. It was 463 Canadian cost to complete at the end of October. And we're now giving, as we build the project, we're giving quarterly reports against that number, and we're tracking that well. So, but inflation is still out there. It's coming down for sure, and we see the effect of that in the bids we're getting from vendors, and in the supply chain kind of dynamics and that's happening. So it looks like that thesis that this year and next year are good years to be building a mine is playing out well. But for us, on a practical basis, we've chosen to build this mine with an owner-operated execution strategy. You'll see some developers going an EPC or EPCM route, where a part of the project is compartmentalized and given over to a contractor, and they will take responsibility for that maybe for a fixed price, and that's a good way of doing it. Others will do it the way we're doing it, which is you sort of take ownership of the whole thing. You appoint sector experts to do your engineering, but then you do the procurement and you do the construction management. And in our view, that's how I've done it in the past, and that's how our team has done it. Tim Williams, our Chief Operating Officer, with his projects when he was at Rio Alto, and myself at Renard Mine. And the benefit of doing it that way is that you can go for cost savings, and you can go for schedule savings, most importantly, through your procurement process and your construction management process. So if costs are coming back too high, you can look at the scope. You can look at how you're managing that particular part of the project. You can reassess it. You can sharpen your own pencils, as well as asking your vendors to sharpen their pencils, and you can get to the place you want to get to. So that's a hands-on approach, and that's how we could have told everybody we're going to build this project. We'll take responsibility for the challenges, and certainly inflation is still a challenge out there. But we'll also put ourselves in the position to get the opportunities when they arise. And the most important thing in building any capital project like a mine is schedule. And you don't have any chance of keeping the project on budget if it's not on schedule. So keep it on schedule, and you're giving yourself a chance to keep it on budget. And again, that comes through ownership of the process and dedication of the team to that.
Last question for you. if
long answer on inflation.
Yeah, well, it's not an easy one to answer, I'm sure, and thanks for the detailed explanation. If you're meeting an investor in April of 2023, what's the core message out?
Well, I think we're going through the classic cyclical, life as a public company in terms of our valuation. We've taken the hard choices, made a construction decision, put a team together, put out a set of numbers that are real, that we're going to report against. We've raised our financing, and we're building the mine. In our presentation materials, we're talking about the valuation thesis for this company. And the finishing line for us is a project that will have 200,000 ounces a year at surface in Newfoundland with a good AISC, a good cash margin, cash flowing, not over leveraged, with a project that's got a 14.5-year mine life and lots of exploration upside. Mm-hmm. That's a significantly valuable proposition. A much more valuable proposition than this company is currently trading. And this company is currently trading because we're in that
Lassonde curve.
We're in the Lassonde curve, right? It's kind of like it has been written, and we're going through that. So, we've got a finishing line for this company. We know what that looks like, and we're working diligently to get there. And we know what the company is worth at that finishing line. And our job is to sort of not stuff that up, is to get to that finishing line and bring forward those valuation attributes. And we're enjoying the fact that gold's at $2,000. Long may that continue.
Yeah.
And if it does continue, it's 200,000 ounces at surface in Newfoundland is a very, very valuable situation, a very valuable business in that world.
Mr. Manson, thank you, sir.
Thanks, Carl.
I wish you nothing but the best with all your meetings here at the conference.
Thank you.
And maybe we'll catch up with you later.
Your driving is excellent.
Well, I have made a few bad turns, but you know what?
We got lost a little bit back there.
Yeah, we went under a bridge and it went dark, so we had to...
we had the bridge.
Yeah, but I think all in all, we've done okay.
Yeah, thank you.
All right, thanks.
Pleasure.